PAPSS and the African Digital Market, the blueprint for a sovereign continental payment system. Africa's answer to SWIFT is a real-time, credit-free settlement network built for 1.3 billion people. Section 1. Introduction. Africa is entering a decisive digital moment. For decades, the continent's economic destiny was shaped by foreign financial systems, foreign reserve currencies, and foreign infrastructure. Today, two major continental projects, the Pan-African Payment and Settlement System, also known as PAPSS, and the African Single Digital Market, also known as ASDM, are converging into something unprecedented, a unified digital and financial architecture for 54 countries. If Africa succeeds, it will not just improve payment efficiency or expand fintech access. It will create the first continent-scale sovereign financial operating system, a system where identity, payments, data, and digital trade no longer rely on external intermediaries. This is Africa's opportunity to define the rules rather than inherit them. Section 2. The historical problem: fragmented payments and foreign dependency. For most of modern history, African cross-border payments have been crippled by the following: SWIFT dependence, United States dollar and euro intermediaries, correspondent banking bottlenecks, high friction and slow settlement, multiple currencies, and inconsistent regulations. The result is a landscape where Lagos to Accra money flows could take days, incur heavy foreign exchange spreads, and rely on multiple foreign banks along the route. Meanwhile, Africa pioneered mobile money, with countries like Kenya, Ghana, and Tanzania achieving near-universal adoption. But the success of mobile money remained largely within national borders. Interoperability, especially cross-border, lagged behind. The paradox was clear. Africa mastered digital payments domestically, but remained dependent internationally. PAPSS and ASDM are the first attempt to resolve this contradiction at the structural level. Section 3. What PAPSS actually is. PAPSS is Africa's answer to SWIFT, but the comparison undersells its ambition. SWIFT is just messaging. PAPSS is messaging combined with instant settlement. At its core, PAPSS is the following: a real-time cross-border payment rail, a pre-funded, central bank-anchored settlement engine, a system that enables local currency to local currency transfers, a network coordinated and funded by Afreximbank with support from African central banks. PAPSS participants, including banks, payment service providers, and switches, hold pre-funded accounts at their central banks that facilitate instant settlement. No delays, no correspondent bank chains, no external hard currency dependency. Africa is finally routing African money within Africa. Section 4. The architecture finality without blockchain. Here is the surprising part. PAPSS achieves near-instant, irreversible finality, a property commonly associated with blockchains without being blockchain-based. How? Through pre-funded settlement accounts held at central banks. If Bank A in Ghana sends a PAPSS payment, it must already have the funds reserved. PAPSS deducts those funds instantly, credits Bank B in Nigeria, and settles through the central bank's real-time gross settlement systems. This eliminates credit risk, correspondent banking delays, rehypothecation risk, and multi-layered IOUs. Bitcoin provides finality through a bearer asset and distributed consensus. PAPSS provides it through institutional finality and a no-credit architecture. The design philosophy is different, but the outcome, instant settlement, is similar. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. Section 5. ASDM, the Digital Rulebook for a Unified Continental Market. The African Single Digital Market, or ASDM, is the regulatory and standards engine designed to unify Africa's digital ecosystem. It sets the rules for digital identity, e-commerce, data governance, cross-border digital flows, fintech integration, and cybersecurity and interoperability. ASDM ensures that digital platforms, mobile money providers, and payment institutions across Africa are aligned under a unified framework. Think of it this way. PAPSS is the rail. ASDM is the rulebook. Together, they create the infrastructure and the standards necessary for a unified continental digital economy. Section 6. User-level reality. How a Ghana to Nigeria payment actually works. Consider this real scenario. You are in Ghana with a mobile money balance. Your friend in Nigeria has a traditional bank account. Here is what happens. You initiate the transfer, selecting Nigeria as the destination. Your mobile money provider or its partner bank formats the instruction for PAPSS. PAPSS validates the payment and routes it to the Nigerian banking network. The Ghanaian participant's pre-funded account is debited instantly. Nigeria's participant bank receives a credit in Naira, and your friend's bank account is updated. You get confirmation, often within seconds. Foreign exchange conversion happens either at the sending bank or via PAPSS-connected foreign exchange providers. Fees are determined by participating banks or wallets, typically much lower than legacy cross-border costs. This is not a future scenario. This is already happening in many corridors, although mobile wallet integration is being rolled out in phases. Section 7. Strategic implications for Africa. PAPSS and ASDM together unlock the foundation for Africa's digital future. Trade acceleration under the African Continental Free Trade Area, lower costs for small and medium enterprises, exporters, and individuals, faster e-commerce scaling, greater financial inclusion, retention of African capital within Africa, sovereign control over value movement, reduced reliance on United States dollar and euro infrastructure. The scale is unprecedented: 54 countries, 1.3 billion people, and hundreds of millions of mobile money users. For the first time, Africa has the tools to move value across borders without external permission or foreign intermediaries. Section 8. Systemic benefits: stability without leverage. Because PAPSS requires pre-funding and prohibits settling on credit, it removes the structural fragility that caused previous financial meltdowns. No credit lines, no correspondent bank chains, no multi-layer rehypothecation. This architecture is inherently resilient. No one can default mid-transfer. No one can freeze the network due to credit issues. No contagion risk spreads via settlement obligations. No cascading failures from over-leveraged intermediaries. It is a risk-minimized payment system designed for stability and speed. Section 9. Roadblocks and realistic challenges. Despite its promise, PAPSS and ASDM face obstacles. Mobile money integration remains uneven. Some countries' banking regulations are still outdated. Foreign exchange liquidity varies across markets. Banks may resist disintermediation. Interoperability across 54 countries is technically complex. Many central banks still follow non-24/7 settlement schedules. This is a multi-year, multi-phase implementation, but the architecture is sound. Section 10. Long-term vision. Africa as a global standard setter. If PAPSS and ASDM reach full adoption, Africa could pioneer a new model of unified digital identity, real-time cross-border settlement, domestic currency-based trade, mobile money integrated banking, and sovereign digital infrastructure. Rather than copying Western or Asian systems, Africa would be defining its own. This could become a global reference design for emerging markets seeking sovereignty from foreign payment rails and reserve currency dependence. Section 11. Conclusion. Africa now stands at the edge of its most important digital transformation since the birth of mobile money. PAPSS delivers the first continent-scale settlement rail designed for speed, stability, and sovereignty. ASDM provides the regulatory backbone to unify digital identity, e-commerce, and data flows. Together, they form the foundation for a continental digital economy capable of serving 1.3 billion people. Africa is not just catching up. Africa is building the architecture for its next 30 years on its own terms.